Assalamu alaikum, everyone. I hope you are doing well. Today is Tuesday, March 25th, and we had a decent day in the markets, especially if you're a Tesla investor like we are. The S&P was up 0.16%, not too bad. The Dow Jones was up 0.01%. Let's call that flat. The Nasdaq was up half a percentage point. The VIX is down. The president managed to not say anything terribly damaging regarding tariffs. And so the VIX is down. The Russell was down 0.56%. Now, in terms of winners and losers today, at the top of the list, Tesla was a winner, up close to 3.5%. Nothing to write home about, but when you look at the other names, a lot of them were red. Gold has maintained its level above 3,000. Bitcoin is at 88,000. Remember, I mentioned we'd really need to break above the 92,000 resistance in order for me to have more confidence that the down phase is over. And who knows, we may get that. We'll look at a couple of metrics in this live to inform our view. Dogecoin had another good day, up close to 5%. It's now north of 19 cents per token, so we'll take that. So let's look at the markets and see whether they are ready to run or not. A lot of really interesting metrics we're going to go over in this live. Leave a like if you enjoy these lives. Without further ado, let's get started. The U.S. consumer confidence fell to levels we haven't really seen since February of 2021. This is primarily driven, I think, by the inconsistency in policy and messaging that's coming out of the White House. The previous reading was at 100. This reading is at 92. The forecast was for a 94 level reading. So we actually underperformed the forecast. And because of that, we didn't have as healthy of a day in the markets as we did yesterday. Now, if we look at the weekly performance for equities, we can see that Tesla has done really well. It's up close to 30% on the week. There are other names that have done well. Really, the Mag 7 has done pretty well. They're the brightest boxes here. If you look at Meta, up 7.55%, Nvidia is up close to 5%, Google is up north of 6%, Apple is up north of 5%. So the usual suspects did very well. And in fact, if you look at consumer defensive utilities, they didn't do that well. So interesting, we saw for a very brief period a rotation out of Max 7 into the rest of the S&P. Now it seems like the Max 7 is reestablishing itself as a leader here. Now, if we want to look at seasonality in the markets and at least what the averages suggest, if we look at the last 20 years, this is a very interesting chart. If we look at the last 20 years, we can see that the markets typically bottom in March. And April is typically a very strong month. May is a strong month. And then June and July, things mellow out. And then when we get to August, that's typically where we peak. And people typically go on vacation. And so we have some chop solidation until around the end of October, and then we end pretty strongly in November and December. That has been the story of the average year for the last 20 years. Interesting to see whether or not this replays this year. We had a pretty tough March, but if we look at the performance on average over the last 20 years, this is par for the course. This is something to be expected. So let's see if we have a rebound in April. I definitely think if we get some positive geopolitical news, if we get some deals with regards to tariffs and rolling back some of those tariffs, exceptions for countries on those tariffs, I think that that could really feed into a strong recovery. Before I forget, PIF membership is now at a 35% discount only until the end of Ramadan. So make sure you take advantage of that while the offer still lasts. Only a few days left in this offer. If you look at the fear and greed index, the now I've mentioned before that I thought liquidity and Bitcoin, and I've showed how the two move in tandem with the lag between the liquidity levels and Bitcoin's price. If you look at something like the fear and greed index, they basically move in lockstep. You can see the fear and greed index is the colored line. The Bitcoin price is in that darker gray line on the graph. And you can see that we're at pretty low levels here in terms of that is approaching extreme fear. The low this year was on March 10th with extreme fear at around 15. Now, this is using the coin market cap crypto fear and greed index. Different sources have different indexes, but we have bounced off of that low. We're now still in fear territory, but we're not in extreme fear. Now we're at 34, but the more fear there is in the market, the better the prices are. And historically, that has been the time to buy. It does seem like we are exiting the fear range here and entering into neutral. We'll see if that can happen. Now, as we can see, the two move in lockstep, the fear and greed index reading and the Bitcoin price. And so if we're able to break out of this fear zone, we should see a greater recovery in Bitcoin as well. And if you're wondering why your altcoin portfolio is in the dumps, well, it is certainly not altcoin season. We are firmly in Bitcoin season. That's that range in orange here in the bottom. Anything above 75 is altcoin season. We are now at 17. Anything below 25 is Bitcoin season. We are firmly in Bitcoin season. Altcoin season typically follows Bitcoin season. So we'll see if that pattern holds. Now, if you look at gold in the last year, it is up 37%, which is quite remarkable. Bitcoin is up only 26%. Now, it's important, I think, when looking at these things to understand that the range that you choose, the time period that you choose, is going to determine the results that you get. If you look on average, though, over the last few years, Bitcoin has far outperformed gold. So it's important not to be a hostage of the current time and actually zoom out and look at returns over longer periods of time. I don't think 1 year is enough. Gold did outperform, but I do think that Bitcoin will return to outperforming. Now, if you look at the yellow line here, so this yellow line is actually Robinhood stock, and it has outperformed gold, which is this um, gold color, and Bitcoin, which is the orange color. Now, for the last year, at least a good part of it, Bitcoin was outperforming gold. But recently, in the last, at least year to date, gold has outperformed. If you look at Robinhood, it has outperformed both gold and Bitcoin. Now, there's a lesson here, which is that sometimes you don't want to invest in the asset itself. Sometimes you want to see what is the second order impact of a certain phenomena. And if you're bullish on gold, or you're bullish on Bitcoin, or you're bullish on the markets, then someone selling the picks and shovels for people to actually act on that, on their trading desires, on their investing desires. Someone who is selling the picks and shovels will often do better than the assets themselves. Something that I always like to remind investors, always like to remind myself, is that really you don't want to be where the crowded trade is. You want to think, okay, if this happens, then what is the first order impact? That's where the biggest crowd is going to be. What's the second order impact from that? There's going to be less of a crowd there. You'll probably get better bargains there. So something to keep in mind here. Now, Bitcoin has broken above the 200-day moving average, typically in bull phases of the market. Now, whenever we go below the 200-day moving average, this has been a clear signal to buy. And we briefly broke below the 200-day moving average, and now we are above it, which is good in terms of giving signal that we're still in a bull market. Typically, in bull markets, the dip below the 200-day moving average is very short-lived. This is, in fact, what we are experiencing. It also means that probably the deals aren't as good as when we were below the 200-day moving average, but nonetheless, we are well off our highs still with Bitcoin, and there's probably more room to go here. If we look at the Bitcoin monthly returns, now previously I shared the S&P monthly returns over the last 20 years. If you look at the Bitcoin monthly returns in the March of April, which has been strong for the S&P, as I've mentioned, the Bitcoin returns on average have been close to 13%, which is the third best month of the year, behind only November and October. So, on average, there's reason to be bullish on Bitcoin during the month of April. Obviously, a lot will be decided by what headlines come out during the month of April. But from a seasonality perspective, Bitcoin or April is a good month to be owning Bitcoin. And in other news, Cathie Wood came out with an interview suggesting that Tesla will 10x, reach $8 trillion in valuation. The interesting thing about her prediction is that it does not include bots. It does not include perhaps their valuation doesn't include the biggest contributor, I think, future contributor to Tesla's bottom line, which is their Optimus robot. 90% of the 10x that she is predicting comes from robotaxis. So this is a good return versus risk profile, because that even if one of the many lines of business that Tesla is involved in doesn't turn out exactly as predicted, then it still has the potential to 10x, which is quite remarkable for any company. Now, it is very reassuring, I found very reassuring, that the new Model Y is basically selling as much as they can produce in China. This is very reassuring because the competition is the fiercest in China. And when you look at the weekly sales of their new Model Ys, it is growing week after week. So their sales are very healthy in the most competitive market in the world. Yes, they did stagnate with the old Model Y as people were anticipating the new Model Y. But now that the new Model Y is out, it seems like they're basically supply constrained, which reassures me as an investor that, in fact, the Chinese models are not superior, and Tesla has maintained its appeal in one of the most competitive markets on earth, if not the most competitive markets on earth as far as EVs are concerned. So with that being said, final reminder, only 6 days left, 35% off for your PIF membership. All the details are in the description. Let's go to questions. Muhammad, any updates on that stock that we have in our portfolio for PIF members? So yeah, it's pretty expected to that a company that's in biotech in the research phase is going to need to raise money. So there's no surprises there. I think we'll have to see more detail coming from the company, but this is par for the course. it's tempting for me to actually reallocate some or if not all of that investment, even though it's a very small part of our portfolio. It's tempting for me to reallocate that to something that's running now, and then we'll see if we revisit it later. So maybe I'll have more on that for PIF members soon, inshallah. Ali says, not fully confident the downtrend is over. Allahu alam, we'll see. Let's wait and see. I'm waiting for SPY and BTC to hold. So we'll see. I think the fundamentals are there. We just have to make sure we don't shoot ourselves in the foot policy wise. But I think the fundamentals support a recovery here. We'll see if tariffs get actualized. That will, to the extent, obviously, the extent of the tariffs exceptions, those will all impact. I think they're going to be rolled back a bit, won't go in exactly as advertised, but we'll have to see. Salam, brother. I have a friend obsessed with following charts. Can charts really predict the future based on human behavior, creating patterns? Well, that's a question that I think that you can ask yourself and see, what you're leaning to logically. I think that, if I charted out your moods, let's say I chart out your moods during the day, will I be able to predict the next hour or two of your mood? I mean, it's possible there's some correlation, but would you put money behind it? It's this. I think that maybe they factor in to your timing decisions, but it's a matter of weightings. So how much would I weight the chart in my decision making? I don't think it should be more than 10%, if I'm being generous. I think more important is things like liquidity cycles, things like fundamentals for the particular asset. That's more important than a specific company's chart. Salam, what are your thoughts on increased tariffs have significant effect on lithium prices? I mean, I keep hearing, I think today we had another headline about the United States wanting to bring a lot of critical mineral production onshore. And so if that's the case, then I think this will be very good for companies that are in mineral production that are based in North America. This should be very bullish for them. So we'll see if this plays out. This could change in a second. But I love the fact that this is an area that is completely slept on by investors. I don't think pessimism could be worse as it is reflected by the price. I mean, there are a lot of great deals out there. So I think, if you look at the market, this is one spot in the market where there definitely isn't overvaluation. You could argue, Mag 7 may be overvalued. You can argue, some other spots in the market could be overvalued. But when it comes to, lithium production, for example, it seems like the market has completely given up on it, at least for the time being. And that's really where you can find some alpha. Said Bitdeer will 10x. What time frame do you see? I think probably in 5 years. So similar to Tesla. It has the potential to do that, and maybe even more than that. It has the potential to do that. But this is not financial advice. Obviously, my thesis will change as market conditions change. But I really like the fact that they're rethinking the mining rigs. And this is something that really hasn't been done. And I just, going back to the picks and shovels that we saw with, Robinhood providing picks and shovels for people who are interested in investing and bullish on markets and, different parts of the market, and how good Robinhood did. I think of Bitdeer as, okay, Bitcoin is going to become, it's climbing up the ladder of most valuable assets globally, and maybe it actually reaches the number one spot. A lot of Bitcoin enthusiasts think that it will and surpass gold. So if you are the number one or number two company providing mining equipment for this asset that is, the number one and most valuable asset in the world, or close to it, or climbing the ranks, or getting there, so multiple trillions of dollars we're talking. If you are number one or number two in providing mining equipment for that, what should be your valuation? What is the size of the market for that? And so I think that it has an opportunity to 10x. I don't know, obviously. I think it has a good founder. Yeah, it has a good management, and they seem to be doing the right things. That's, Allahu alam. But I think that there's a distinct possibility that this plays out in a good way. There's going to be a lot of fluctuations, as we saw. I mean, we were north of 26, now we're at 10. So there's going to be a lot. That's why we always take profits. We took profits on the way up, and then we bought back on the way down. So I think we're doing it right. So there's going to be a lot of volatility. It won't be a straight line, and wouldn't suggest betting the farm. That's why we have diversification. But I think there's a distinct possibility that this plays out. All right, so hopefully that was useful. Leave a like if you enjoyed this live, and make sure to take advantage of these last days of Ramadan. Make dua for yourself and make dua for the PIF community. Love you all. Take care. Assalamu alaikum, and peace be upon you all.